Right now, as you are watching this, thousands of Canadian retirees across this country are sitting down at their kitchen tables, opening envelopes, and writing checks for bills they are legally not required to pay. Not because the government is hiding the truth, not because something shady is going on, but because nobody, not their bank, not their doctor, not their financial advisor, not even their own family, ever sat them down and told them about one specific document that changes everything about how retirement works financially in this country. This document is real. It is not a secret buried in some obscure corner of the internet. It is not a loophole or a workaround that could get you in trouble. It is a legitimate government-issued document that most retirees have simply never been told to ask for. And the gap between those who know about it and those who do not is costing ordinary Canadian seniors somewhere between $3,000 and $8,000 every single year. Think about what that number actually means in your life. That is not an abstract figure on a spreadsheet. That is a trip to see your grandchildren. That is a year's worth of prescription medications. That is 6 months of groceries sitting on the table. That is the kind of money that changes whether retirement feels comfortable or whether it feels like you are quietly falling behind every single month, watching your savings shrink while your bills stay exactly the same. The people who have this document in their hands right now are not wealthy. They are not well connected. They did not hire an expensive accountant or find some complicated tax shelter. They simply knew to ask for one piece of paper from the right government office, and that paper opened the door to savings that most people spend their entire retirement never accessing. Here is what makes this so frustrating, and I want you to really sit with this for a second. The programs we are about to talk about were specifically created by the federal government and by provincial governments to protect you. They were designed with Canadian seniors in mind, people on fixed incomes, people who worked their whole lives and now live on CPP and OAS and maybe a small pension, people who cannot absorb a sudden jump in their hydro bill or their property tax without it affecting something else in their budget. These protections exist. The money is already allocated. But the system does not automatically give it to you. The system waits for you to show up and ask. And the single document that makes most of these programs accessible is a benefits verification letter that you can request directly from Service Canada. When you have that letter in your hand, it becomes proof of your eligibility. It becomes a key. And over the next few minutes, I am going to show you exactly which 5 doors that key unlocks, because the exemptions tied to this document do not cover just one bill. They cover 5 separate bills that most retirees are quietly paying out of pocket right now when they do not have to. Stay with me all the way through, because there is also a 6th bill at the very end that almost nobody thinks about, and I am saving it specifically for the people who make it to the finish line. Let us get into the first one, because it is the one that surprises people the most and the one with the largest single-year impact for homeowners. The first bill is your property tax. If you own your home, if you have been living in it for years and you are 65 or older, and if your household income falls below a certain threshold, you may have the legal right to stop paying your full property tax bill right now or to receive significant money back every year. Most people hear this and assume it only applies to people who are truly destitute, people with almost no income at all. But that is not how the thresholds work in reality. In several provinces across Canada, a senior household earning under $48,000 per year qualifies for meaningful property tax relief. That number covers a very large percentage of retired Canadians who are living on CPP, OAS, and modest savings. In Ontario, the Senior Homeowners Property Tax Grant provides eligible seniors with up to $500 back every year. In British Columbia, the property tax deferment program goes much further. It allows low-income seniors to defer their property taxes entirely, meaning the payments pause completely until the home is eventually sold. You are not canceling the taxes. You are not doing anything improper. You are using a government program designed specifically to remove that financial pressure from your monthly life while you are still living in the home, and you settle the balance later without penalties when the home changes hands. In Alberta, there is a seniors property tax deferral program that operates on similar principles with very low interest rates attached and no pressure whatsoever to pay while you are still residing in the property. You do not need to hire anyone to access this. You do not need a lawyer or an accountant. You need your benefits verification letter from Service Canada and a short application to your local municipal tax office. That is the entire process for most people. But before we go any further, I want to make sure you understand something important, because the second bill we are about to talk about is one that every single retiree deals with every month, and the savings here are not a one-time thing. They show up automatically, month after month, once you are enrolled. The second bill is your electricity and heating costs, your utility bills, the ones that seem to creep up every season and never seem to come back down. What most seniors do not realize is that across Canada, there are low-income energy assistance programs that have been specifically designed for people in exactly their situation. And these programs are almost invisible unless someone points you directly at them, because they are not advertised the way commercial products are advertised. They sit behind complicated government menus online, and most people never stumble across them on their own. In Ontario, beyond emergency financial assistance programs, there is the Ontario Electricity Support Program, which works differently from most people expect. This is not a one-time check you have to apply for and wait on. This is a permanent credit that gets applied directly to your electricity invoice every single month, automatically once you are enrolled. Depending on your household size and your income level, that monthly credit can range from $35 to $113. Over the course of a full year, that adds up to more than $1,300 back in your pocket without changing anything about how you use electricity. You simply apply once, you get approved, and from that point forward, your bill is lower every single month without you lifting another finger. British Columbia has BC Hydro's Customer Crisis Fund and an affordability credit designed specifically for seniors on fixed incomes. Alberta has the Utilities Consumer Advocate Office and several GRACE programs designed to help seniors navigate reductions in their energy costs. Quebec has Hydro-Quebec's dedicated senior support framework. Every single province in this country has something for seniors when it comes to utility costs. The problem is not that the programs do not exist. The problem is that they do not advertise themselves loudly. They wait for you to find them. And the Benefits Verification Letter from Service Canada is the document you bring to these programs as your proof of eligibility. Once you have it, enrollment is typically straightforward and the savings begin immediately. But hold on, because the third bill coming up is one that tends to shock people the most the first time they hear it, and it is a bill almost every retiree is paying at full price right now for absolutely no reason. The third bill is your phone and internet costs. I know what some of you are thinking. You're thinking these are optional expenses, things you can just cut back on or do without. But that is not how most seniors live in the real world in 2024. Your phone connects you to your family. Your internet connects you to your medical records, your banking, your government services, your prescriptions. These are not luxury expenses. They are essential. And yet most seniors are paying full retail price for both when federal programs exist specifically to bring those costs down for people in exactly their income bracket. The Connecting Families Initiative, run through the federal government and expanded to include low-income seniors, provides access to home internet for as low as $20 per month through participating providers, including some of the biggest names in Canadian telecommunications. If you are currently paying $80 or $90 a month for internet service, this one change alone could put more than $700 back in your pocket every single year. On the phone side, several provincial programs through their social service frameworks subsidize mobile costs for seniors on fixed incomes. But here is the piece that most people completely miss. If you are currently receiving the Guaranteed Income Supplement, the federal benefit added on top of your old age security, you already automatically meet the income criteria for most of these communication subsidies. You do not need to go through a separate income verification process. Your GIS status is itself the proof of eligibility. You call your provider, you tell them you receive GIS, and you ask them directly what their low-income senior rate is. Some providers will make the switch immediately on that phone call. Others require a short form to be filled out. But either way, you are looking at a bill that could be cut in half or more within 30 days of making one single phone call. And we are still not at the biggest one yet. The fourth bill is your prescription drug costs. And I want to be very careful here because a lot of seniors hear this and immediately think they already have this covered because their province has a drug benefit program. And you are right, every province does. Ontario has the Ontario Drug Benefit Program, British Columbia has PharmaCare, Alberta has the Alberta Seniors Benefit, which includes drug coverage. Quebec has the RAMQ. These programs exist and they do provide meaningful coverage. But here is what almost nobody tells you. These programs have deductibles and co-pays that kick in before your coverage actually starts, and a large number of seniors are paying those out of pocket every single month without realizing that their income status qualifies them for a complete co-pay exemption. In Ontario, seniors who receive the Guaranteed Income Supplement pay no deductible at all under the ODB program. Zero, nothing. But thousands of GIS recipients across the province are still quietly paying the standard $100 annual deductible every year because they never told their pharmacist that they received GIS. That is $100 disappearing from their retirement savings for no reason other than a missing conversation. Beyond the deductible situation, most provinces also have exceptional access programs that can cover medications not normally on the standard formulary when your doctor submits the appropriate paperwork. And Ontario's Trillium Drug Program is specifically designed for households that spend a disproportionately large portion of their income on prescription drugs, with a cap on what you pay relative to what you earn. Your pharmacist can help you access most of this. Bring your benefits letter. Sit down with your pharmacist and ask them specifically whether your GIS status or your low-income senior designation changes what you are currently paying. In many cases, the savings begin on your very next prescription refill. Now we are at number 5. This is the one I mentioned right at the beginning of this video, and I want you to pay close attention because this is the bill that quietly takes more money from retired Canadians than almost anything else. And it is also the one that can be most dramatically changed when you have the right documentation in your hand. The 5th bill is about what the government automatically withholds from your own retirement income. This is not about fraud. This is not about a tax loophole. This is about a very common situation where the way your income looks on paper does not accurately reflect how much tax you actually owe, and as a result, the government withholds more from your monthly payments than they should. Here is how it happens. Many seniors receive OAS and CPP and possibly a small workplace pension. When you add in an RRSP withdrawal, some rental income, or any investment income, your total reported income for the year can temporarily look higher than it actually is on a sustained basis. The CRA's automatic withholding system sees that number and starts pulling more tax from your payments every month based on a projection that does not match your real annual picture. What most people do not know is that you can apply directly to the CRA using a form called the T1213 to correct this. This form tells the Canada Revenue Agency that your actual annual income is lower than what the automatic withholding calculation assumes, and it formally requests that they reduce the amount of tax they take off your payments each month. When this form is approved, you immediately start receiving more money with every single payment, not as a refund at tax time, not as a lump sum you have to wait for, as an increase in what lands in your bank account every single month starting right away. For many seniors, this means an extra $200 to $400 appearing in their account month after month. The income confirmation code on your benefits verification letter from Service Canada is exactly what you bring to your tax preparer, or attach to your T1213 submission to show the CRA precisely where your income sits. One piece of paper, one form, and your monthly take-home changes permanently for the better. Here is what I want you to do right now before you close this video and move on to something else. Go to the Service Canada website or call 1-800-277-9914 and request your benefits verification letter. It costs you nothing to request. It takes only a few minutes to ask for, and it is the single document that connects everything we just went through together. Property tax reductions, automatic monthly energy bill credits, phone and internet subsidies, drug coverage improvements and deductible eliminations, and the reduction of unnecessary monthly tax withholding. 5 separate bills, one document, and every dollar of savings is legal, legitimate, and sitting there waiting for you to claim it. I also promised you a 6th bill at the start of this video, and I keep my promises, but only for the people who stayed all the way through. The 6th bill is your home insurance premium. If you are a senior on a fixed income and your home is fully paid off or close to it, there is a very good chance you are paying more than you need to for home insurance every single year. Most insurance companies offer senior discount tiers that they almost never proactively advertise to their existing customers. You generally have to ask directly. Beyond that, several provincial consumer protection offices have formal programs that allow low-income seniors to dispute unfair rate increases and access regulated baseline coverage at reduced premiums. In Ontario, the Financial Services Regulatory Authority oversees this process. In British Columbia, the BC Financial Services Authority serves a similar role. When you combine your income documentation with a formal written rate review request, insurance companies are often legally required to justify the rates they are charging you. Many seniors who have gone through this process have seen their annual premiums drop by $300 to $600 or more without changing a single thing about the coverage they hold. The only catch is that you had to watch until the very end to get this one, and now you have everything. The document is real, the savings are real. The only thing standing between you and keeping thousands of dollars inside your own retirement is one phone call to Service Canada and one letter arriving in your mailbox. Do not let another month pass while you write checks for bills that the government already built programs to eliminate for people exactly like you. And if you want a step-by-step walkthrough of exactly how to fill out that T1213 form we talked about in Bill number 5, the one that puts more money into your account every single month without waiting for tax season, make sure you watch the next video coming up right now.